Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, May 1st, 2020. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. Next week is a very special day. It's Victory in Europe Day. This is a special day for me personally because my grandparents have actually fought in the World War II, and I think it's an important day to remember for everybody because the lessons of World War II are just as important today. So stay tuned for a Victory Day in Europe special next week. I'll try to cover some of the stock market charts from the 1940s and see if any of the world events actually had influence on the price of the stock market. But right now we're seeing another breakout. S&P Futures broke out into the new bull market. I will show you what I mean. However, there are divergences between S&P 500 Futures and the ETFs, exchange-traded funds traded here in the United States. We're seeing emerging markets and European equities weakness, and I think they could easily retest March lows. Lots of weird action in the junk bonds, and today I found this out. I actually retweeted it. I'll show you later on. Jeffrey Gundlach says that the Fed actually has not bought any corporate bonds and by extension any junk bonds. Very interesting. Treasuries could still pull back, and we're looking for this kind of pullback to initiate long positions to buy. Oil is actually approaching overhead resistance, and if it overcomes that resistance, it could easily move to around $40. And somebody asked me to, one of the subscribers asked me to cover silver, so I will cover silver and see which one is better for hedge against inflation. While Bitcoin, big news again, also is in an uptrend. Okay, so let's look at S&P 500 Futures. As always, throughout this presentation, I will be using my proprietary trading indicators, and these are the indicators: the green, the blue, the red, and the yellow line. In a sense, they're more of an overlay, and they are. I designed them, and I am using them, and I am, sharing them with my subscribers as just a very easy way to visualize price action and the support and resistance. So to get these same indicators on your chart, you can go to MasterChartsTrading.com, click on sign up and get the trading indicators. So you can sign up here, subscribe here. Once you subscribe, I can open the door for you, and you are able to see those indicators on TradingView platform. Now this TradingView platform is free, so you do not need a paid TradingView account to enjoy my indicators on your chart. Alright, so we are again seeing what appears to be a breakout, so it's kind of hard to see. I'm going to zoom in on this price action, and right there on April 29th, you can see a close just above the blue line. So you can see the close was 2941, while the blue line was 2938.75. So technically it closed above it, just barely, but yes, I think it it did close above it. So that means, in my mind, the stock market S&P 500 is now in a bull market. In other words, I will contemplate only long positions. I will contemplate only buying. I will not contemplate any short positions for a while now. What does this mean? So there is a disconnect between what we're seeing in the news and what we're seeing, happening to the people that are being laid off from the same companies that are part of the S&P 500 index. While at the same time, the actual index, the companies that comprise it, are now back in the bull market. So what does that mean? The only thing I can describe is this is just an unfair rally. So this rally began back on 23rd of March. If you caught this move, somehow you were like pressing and you found, okay, this is the bottom. Congratulations. Now I am not prescient. I am, following my own system. And at that time, on 23rd of March, it just told me to do nothing. I exited all of my stock positions back in February, and end of February, right there where I'm hovering. And so I just did nothing. I sat through this whole downdraft, did some bear market projects, kind of did nothing here, just sit around and do nothing. So from February until basically now, I absolutely did nothing. And now looks like we're seeing a breakout. So what does that mean? This means that we're thinking now that the stocks will continue higher, and we want to only think about buying now. Now, still tons of problems remain because really nothing has been resolved. Is there a difference between what is happening on 23rd of March and what is happening, today? No, there is no vaccine. There is one possible drug candidate. There's a couple of, what I understand, failed drug candidates, from the chloroquine family that just give lots of side effects. For example, cardiac arrest and death. There is one drug candidate from the Gilead which is still kind of being researched, so very difficult to say what's going on. So overall, nothing has really changed. If anything, the disposition has actually got worse, because something like 30 million Americans were laid off through this period, basically. And yet the stock market is breaking out into the new bull market, and most likely it will continue higher. I mean, I'm thinking this now, and I'm going to play this market accordingly. I don't want to be shorting it. I want to be buying it. The only thing I can say is that this is very unfair to the people who got laid off, and the market itself is like a disconnect between the quote-unquote real economy and the stock market itself. So next week I will go through some of the World War II charts, and they were happening as thousands, hundreds of thousands, sometimes millions of people were dying on the battlefield, and from various diseases and from just genocide. Yet sometimes you can see that even though that was happening, the stock market was still going higher. So how do we explain it? The best thing I can offer is don't try to explain it. There is really no need for it. We just take, unfortunately or fortunately, just look at the chart itself and try to worry less about the underlying fundamentals. The price is really what all you need to know. The price right this instant is telling us that I think the stock market will continue higher. Now, some other indicators, for example, S&P 500 ETFSPY, so this is S&P 500 ETFSPY, notice did not break out. I mean, it got very close, but there was no close above the blue line, so technically there was no breakout on this ETF. Yet the futures broke out. So go figure. I guess I have a more tendency to trust the futures, but at this point we just need to basically just play along and see what happens. I'm more inclined to trust the futures right now. Nasdaq, the QQQ, actually broke out a little bit earlier, right there on 14th of April, versus S&P, which tentatively broke out 3 days ago on 29th of April. So QQQ, the Nasdaq, tech-heavy Nasdaq, seems to be leading the market higher. So overall, this is a very good indicator, and it's showing that the technology is leading. So this technology is more of a high risk, high beta sector, and generally speaking, this is a good sign. The other two indices, the Dow Jones, DIA or DJI, whatever, haven't actually gotten to bullish levels yet. So Dow Jones is lagging, as the small caps, IWM, they're also lagging. I mean, they got pretty close, but they never broke out. So IWM, the small caps, is a relatively small part of the stock market compared to the actual S&P 500. This is like, I don't want to lie, but I think it's like 15% of the entire stock market, while the S&P 500 is like 60% or something like that. So vast majority of weight is skewed towards the top because of the market capitalization. So what does this mean? Probably just means that we need to watch and see what happens. So the Dow Jones didn't break out, the IWM, the small caps didn't break out, but the Nasdaq and the S&P 500 seems to have broken out. So overall, we probably just want to trust the S&P 500 more than we want to trust the small caps. This is the emerging markets, EEM. So EEM, let me just get this on the other chart. So EEM, emerging markets, quite weak and lagging, and you can see that they are not even close to the breakout above the blue line. Breakout would be above close above $40.24. So if anything, I mean, potentially one can short it. So actually right this instant would be an opportunity to sell it, to short it. I don't want to bother actually right now because I think the S&P is in a bull market. So usually stocks around the world move together in lockstep. Is this going to happen this time around due to coronavirus? Anybody's guess. Maybe the stocks will decouple from one another because now the globalization is kind of decreasing. So perhaps emerging markets will do their own thing while S&P 500 will do its own thing. Same goes for VGK, the European equities. Kind of very weak again. I mean, if anything, it might be a good shorting opportunities, but once again, I'm just reluctant to short because if S&P is in a bull market, why would I want to short Europe? Because again, of the correlations. Correlations are high, so I don't want to be doing that. So overall, there's just kind of weird, not much happening in the markets. Even though there's a lot of happening, there's not much happening. So the best piece of advice I can offer is just to do as little as possible right now. Here we go to junk bonds. So junk bonds probably the most exciting and very interesting happening. So on here you can see from 8th till 9th of April there's a large gap here where the Federal Reserve, and I have to revise this, says that they will buy junk bonds. Today I found out that apparently they didn't. So here it is, and this is a quote, this is a tweet by Mr. Jeffrey Gundlach, who's I think a hedge fund manager. I'm told the Fed has not actually bought any corporate bonds. And then he's describing what that all means. But the mere fact that they actually didn't even say anything, this just shows the power of the word. People, even the just mere mention that Federal Reserve will start buying this or have already bought, caused this junk bond ETF to just jump. And as I kept pointing out in my previous videos, this also means that many of the short sellers got stopped out, because if I was shorting this, I would have shorted it right there on the 1st of April, possibly here on the 7th of April, and yes, I would have been also stopped out here on the 9th of April. So now what's happening? Well, first of all, there's this gap from the 8th till 9th of April, and it's almost closed. So very small amount of this gap is still remaining. So I think we're probably gonna see a continuation lower towards around 93 area. Where am I getting this number? I'm getting this number from my indicators right there where I'm hovering. So it looks like another 3%, 4% down before the Fed will do something else. Like, for example, they will say stuff without actually doing it. And the markets apparently reacted very aggressively. So will the Fed begin to actually buy stuff? Or are they going to say more stuff and then the market will react? And I guess we'll find out next week. But overall, I don't like this at all. The Federal Reserve apparently is, according to its mandate, is not even supposed to be buying, foreign into the junk bond territory. This is a very big intervention, and a lot of people are very uncomfortable with this right now. So, where is this going? It's weird. Everybody's saying this word unprecedented. I don't like to keep saying the same word, unprecedented. Yes, it's unprecedented. And this is, I don't like it, basically. So it smells of large changes in the way the currencies are structured even. Perhaps the dollar will eventually lose its reserve status as a partially the result of this action. So we'll see. But me not liking something doesn't really matter because we can still trade it, right? So let's wait until something of this gets resolved. Right this instant, I'm more interested in buying junk bonds, this particular ETF, GNK. I'm more interested in buying it than in shorting it or than in doing nothing. So I want to see how this price action pans out next week, possibly 2 or so. If it gets down to the red line, we will need to watch if we will see like maybe hammer-like candlesticks. That means that somebody that is big stepping in and buying it. But right this instant, it's all projection. So we'll need to just basically wait and see. Treasuries, so TLT treasuries, bullish chart, very large spike here back in early March, and now big pullback. Another bounce. I don't think this bouncing around is done yet. I think we may see easily a pullback of around 5%, Again, where am I getting these numbers? You can see it right there. This is a support resistance line. So a support resistance for TLT is currently at 158.93 or almost 159. So a pullback towards that level would be reasonable and would be a much better opportunity, I think, if you want to be buying it. Here's oil, CL1 exclamation point. So as another unprecedented move, oil went negative here. Right now it's still positive around $19, and it's now approaching this level. And again, where am I getting this number? 25.91, where I'm hovering right now. So this is a support resistance line. I think that if it is overcome, basically a close above it, then there is a very good reason to think that we could get up to around 47 even dollars, maybe like between 40 and $50. Because I think then at that point the trend would have changed to the upside. Is this a result of some fundamentals, a result of some cutting in production? I recall there was a cut in production between Russia and Saudi Arabia somewhere here in early April, and that cut did absolutely nothing. In fact, it led to negative prices. Or we can say that this was not a correlation. Was it a correlation or was it a causation? Don't worry about it. Like I said, don't worry about the news. When we're trading, we're just concentrating on the chart. So the chart is showing that there is resistance at 25.91, basically $26. If it's overcome, then we can see a move higher, or at least we'll think that it is now in a uptrend. But right now it's still, I still think it's in a downtrend. So if it gets down to 0.58, you can see the prices are ridiculous. We could probably see another negative spike into negative territory rather. Okay, here's gold, XAU USD. So this one, the chart got kind of cleared, but we had a nice run right there. I actually bought myself. Here's my position, GLD. There's my position from 23rd of March. A very nice move. I sold half somewhere around here. I'm still trailing the remainder. So XAU USD in an uptrend and seems to be reacting positively to all of the interventions in the stock market, in the markets around the world. It's a decent inflation hedge, so stocks are probably even better inflation hedge, but some people like to store physical gold or have like gold chains, because actually gold chains do make sense if you think far into the future, or just in different countries, for example Zimbabwe, where money pretty much became completely worthless. So you can use, for example, gold chains. Like you can cut a piece of gold chain, go weigh it, and you can buy something. It's much more difficult to do it with gold coins. It's very difficult to cut a gold coin in half. But with gold chains, you can cut a piece and then go buy something in case of complete meltdown. I don't see it's happening right this instant, but you never know with this virus and the response to virus from around the world. Response, by shutting down basically the entire economy. Looking at gold, same thing. It's in an uptrend. I want to be buying it. Where do I want to be buying it? I want to be buying it at the blue line. Right now, I would just want to be holding it, which is what I'm doing. Okay, so let me show you silver. One of the subscribers asked to show you silver. Silver is underperforming gold severely. The reason being, I think, is because silver, even though yes, it's a precious metal, it is also a industrial metal. Silver is used in many processes. For example, making of mirrors. and it's more of an industrial kind of metal. So silver hasn't actually broken out into the bull market yet. Bull market for silver would be a close above $16, basically $16.50. Right now, it's at around 14, 15 bucks. Yeah, okay, so let's wait and see. It could break out, but if we just if we also look from a point of view of fundamentals, the fundamentals are really bad right now for silver because it's partial in industrial metal. So gold versus silver, obviously gold. You want to be buying gold, rather, you want to have gold and not silver for the time when there is for the dire times. Silver also might do a little bit, like you can probably buy things with silver coins, but it's just not as it's just not as good as gold, basically. So yes, some people like silver. I'm not a big fan of it. I would rather be buying gold. And I think probably the most exciting news of the week was the breakout in Bitcoin. And this is where I'm hovering right now, 29th of April. There's the breakout into the new uptrend, into the new bull market. These two previous alerts, and if you listen to my previous videos, I kept saying, now is the good time to short Bitcoin. Now is the good time to short Bitcoin. That was a failed trade. So this is, you will have failed trades. If some trader or some newsletter writer tells you I have no failed trades, yeah, turn around and run away. I normally have around 70% success rate. So around 70% of my trades end up positive. At the very least, not negative. So you can see the previous alerts for Bitcoin were extremely successful. So you can see a nice right there in November, in December, an enormous move that we caught back from February, and another one right there from 7th of March. 7th of March yielded 56% gain. So yes, you will have some failures, but overall you should be able to outweigh your failures with successes. So I think that's what's happening right now. I think Bitcoin has flipped and now will continue higher. So I would probably be buying it, or rather I will definitely be buying it. I personally don't have that many, I don't really have many Bitcoins, but maybe I'll buy some. Alright, so that's it for this week's recap. As always, please don't forget to hit the like button, share this video, and then once you've done it, head over to MasterChartsTrading.com. One word, MasterChartsTrading.com. Click on sign up and sign up for one of the services. So we have 3 levels of services. Alerts, which is basically newsletter. In the newsletter I talk about various stocks that I'm watching. I send alerts about various stocks that I would be interested in buying. Sometimes we look for shorting opportunities as well. Lots of different stocks, so you will definitely not get bored. This all costs $24.95 per month, or a little over 20 bucks if you sign up for yearly. If you just want the indicators, and I'm talking about these indicators, the green, the blue, the red, and the yellow lines, then sign up for trading indicators. And you can have them on your chart on TradingView.com. So TradingView.com is free platform, and it's internet based, so you don't really need to get any software. And then you can put my indicators on this trading view, so you can see MasterCharts Trading Price Action Indicators where I'm hovering. Very useful, one of the most popular products here. Of course, the most popular products is both alerts and indicators, because not only you get to trade on your own, you will also get the various alerts, and thus you will see a lot of examples. This is very important for traders to see how the actual trades are executed and how much to risk. There is psychology of trading involved, there is risk control. So I highly recommend you sign up for yearly. This is, I'm thinking it's gonna end probably next week, because this is a very good price at 38, 33 per month, and this is a yearly price. It's a steal. And please don't forget, we are working on algorithmic trading robots. So these are going to trade cryptocurrencies and eventually other currencies, and possibly eventually other stocks. But right now we're looking at trading cryptocurrencies, most likely on Binance. So if you don't have a Binance account, open a Binance account. If you are within the United States, make sure it's legal for you. There is Binance.us. If you are not in the United States, Binance.com. Once you open the account, we will eventually, hopefully within a few weeks to a few months, start using an API to control the accounts. We won't be able to withdraw any money, obviously, but we will be able to do transactions. And hopefully, this is going to happen pretty soon. So do sign up for the account, but also put in your email address and subscribe to the interest list. Alright, that's it for this week's recap. Once again, stay tuned for the next week. We're gonna have a Victory Day in Europe special next week. I'll talk about my grandparents. I'll talk about just the overall what was happening during the war in various countries in the United States, since I was born in Soviet Russia. I'll talk about my upbringing and my grandparents that participated in the World War II. Alright, that's it for this week's recap. Thanks for watching. Have another great trading week. Bye bye.